We at Morphic make an impact via investing by avoiding companies that have a negative environmental impact as part of their business model, and also avoiding those companies that have a negative social impact, such as gambling, alcohol, and weapon manufacturers. On the positive side, we look to invest a proportion of the portfolio in companies that have a positive impact. I think they're interlinked, and it's also a question of time frame. Over the long term, we absolutely believe that ESG investing can outperform broad market benchmarks. In the short term, I think we have to be aware that at certain times, fossil fuel companies may outperform broader market indices. For instance, when the economies are strong and there's demand for energy and consequently coal. And on the other hand, there's going to be times we've witnessed in the past where renewable companies, for instance, are overvalued relative to the market and subsequently underperform. So in the short term, ESG can and will under and overperform, but in the long term, we fully believe that ESG can outperform benchmarks. Absolutely, and this is beyond just selling equities that you might hold in bad companies. It involves engagement with not just the management of the company, but also policymakers, politicians, other stakeholders, in terms of trying to influence bad companies to become good ones. I think the future in Australia is very bright. We're certainly seeing many of our peers considering and consequently implementing ESG into their investment processes, and we're certainly seeing a lot more interest in our product.